from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Uber CEO Dara Khosrowshahi declares it's now an all-weather company that can handle all the roadblocks coming its way, from Omicron to regulation. He predicts rides will hit an all-time high in 2022. Our exclusive interview next. Plus, some holiday parties are back. Are women back to renting the runway? We'll talk to CEO Jen Hyman about the return of designer e-com post-pandemic. And Bitcoin rebounds, but is the crypto winter already setting in? We'll break down the latest crypto volatility and get key predictions from Kraken CEO Jesse Powell and Coinbase investor Gary Tan. All that in a moment, but first let's get a look at the markets where all investors have their eyes on inflation. Our Ed Ludlow here with more. Ed, take it away.
Yeah, that's certainly a story. Broad selling pressure across US equities, but tech was the worst performing sector. And that's largely because that's where we see the most stretched valuations, right? We have a Fed meeting on Wednesday. Producer price index came in hot for the month of November. The expectation, therefore, that the Fed is going to accelerate the pace of tapering and therefore a steeper curve on rate rises. You see that playing out with underperformance in the NASDAQ 100, very tech-heavy index. Really, the mega caps were where the brunt of pain were in the NYSE FANG Plus index, although oddly enough, Emily, we saw them pair some of those losses and close down 0.3%. Semiconductors continuing to be under pressure. There's a pattern emerging here. Come with me into my Bloomberg and look at this chart, because over the last 2 weeks, the NASDAQ 100, a tech-heavy index, has fallen 7 times. That's the red bars you see on the far right-hand side. What's really interesting is that when it rains, it pours. Each time the NASDAQ 100 has fallen, it's been by more than 1 percentage point. So investors really trying to make sense of what's going on in this market, positioning themselves to know what to do if they're stuck with these high multiple, highly stretched valuation tech stocks. Of course, there's a lot of individual stories within that, but as I said, there was some pressure in the mega caps on Tuesday. Adobe down more than 6%, Microsoft down more than 3%. Oddly, Meta, the parent of Facebook, doing pretty well, and it's actually outperformed some of its peers in recent days. Not entirely clear why. And one stock that's performed really well after a strong week last week, Uber, up 4%. At one point, it was up more than 7%, having its best day since September before it paired some of those gains. Emily.
All right, Ed, thanks much. Meantime, Uber just had its best week in food deliveries ever and its best week for rides since the pandemic began, despite Omicron. CEO Dara Khosrowshahi says he's confident Uber's profit for the current quarter will be closer to the high end of the company's forecast. That means near $75 million. Uber shares ended the day up nearly 5%. I sat down exclusively with Khosrowshahi and began our conversation by asking whether delivery or rides are in the driver's seat.
The answer is yes. Actually, last week for us was our best week ever in terms of volumes. And mobility volumes now, last week, were pre-pandemic highs. So the world, despite Delta, Omicron, et cetera, continues to reopen. And as the world reopens, the mobility business continues to get better and better. And then on the delivery side, delivery is incredibly sticky. It's a great experience, and we're adding grocery experience to it as well. So the delivery business is also hitting all-time highs, which makes the whole company hit volumes all-time highs last week. That we do think is going to translate into profits. And at this point, we're confident that on an EBITDA basis, we're going to come in at the mid to high point of the range that we gave earlier to our investors. So far, so good.
So let's start with delivery. How do you keep that growth going as the world reopens?
Well, what we've seen with delivery is that it's a sticky habit. It's a little bit like Amazon. People used Amazon pre-pandemic. There was an acceleration, and the majority of people who experience the delight of any food, any restaurant that you want within half an hour, they tend to stick around. So we're seeing delivery audience growth of 25% on a year-on-year basis. We're seeing frequency grow, and we're seeing basket sizes grow as well, which translates to very strong delivery volumes, and we expect those volumes to continue. We're also adding selection, not just selection of restaurants, but now we're adding grocery, convenience, GoPuff, so that essentially if you forget toilet paper, et cetera, you can order on Uber Eats and you can get it inside of half an hour, which again adds to the frequency use case of our service.
Now, mobility, new post-pandemic high. Will it ever surpass pre-pandemic levels again? And if so, when?
It absolutely will surpass pre-pandemic levels. And for example, if you look at mobility bookings in Europe, they're already higher than pre-pandemic levels today. Same thing in Latin America. On a relative basis, the US and APAC are lower than pre-pandemic levels, but we see it over and over again. Every use case is coming back. Workday use case, weekend use cases. Travel's trailing a bit, as you would expect. But the pattern that we see over and over again is as cities open up, as countries open up, volumes actually come back and they eventually exceed pre-pandemic highs. I can't tell you exactly when, because I'll be trying to predict the health circumstance, et cetera. It's difficult, but I am quite confident that next year we will be hitting records, all-time records in terms of mobility bookings. I'll make that prediction now.
Okay, good to know. All-time records next year in mobility.
Yes.
Omicron, though, the threat is rising here and around the world. Are you seeing any impact? Is it impacting airport rides? And honestly, how worried are you?
So we are not seeing any kind of an impact in our business as we speak. Again, last week was an all-time high for our mobility business. This is an uncertain world, and I think we as a company now, because of the global nature of the business, some countries open up, some countries might be closing down, et cetera. On average, the world is getting better. The efficacy of our virus, of our meds are getting better, vaccines are getting better, treatments are getting better. The world now, on average, is handling the virus better, and as a result, that shows up in our mobility business. I think the second factor for us is the delivery business is now bigger than mobility. When we went into the pandemic, the delivery business was about a quarter the size of the mobility business, wasn't yet profitable. And one of the new, I would say, trends that we pointed out to our investors is that we actually expect delivery incremental profits to be at or above our long-term margin targets of 5%. So not only do you have a delivery business that's bigger than mobility, it's a profitable business that's going to push incremental profits. So we're now an all-weather company, and I couldn't say that coming into the pre-virus, but now post-COVID, we're an all-weather company, and I think we can succeed and grow really in any environment.
How does driver supply and turnover look right now? We just spoke a month ago, so just curious if there's been any updates and how long drivers are sticking around once they do return.
So driver supply generally continues to be constructive. We leaned into supply in Q2. We are continuing now to innovate around driver sign-up. Previously, we would say, hey, do you want to drive people? Do you want to deliver food, et cetera? Now we have an onboarding process that we call modular onboarding. Give us your information about your vehicle, yourself, et cetera. When you're ready to deliver food, we'll tell you you're ready to deliver food. So drivers can come and earn much faster on the platform. As they earn faster on the platform, a greater percentage of them are on board. And earnings are now really high for drivers, $35+ in our top 20 cities. And that is definitely causing drivers to stick around and increase their hours on the platform. So the trends right now are positive, but we understand the labor situation, and we have to keep innovating to make our earner experience better and better and better on the platform.
So on that note, a lot of drivers say they want to deliver food instead of people these days. And you're competing with DoorDash, you're competing with GoPuff. Why should and would a driver choose Uber post-pandemic over some of these other options?
Well, I think the great news on Uber is drivers can choose Uber and they can deliver people, they can deliver food, they can deliver groceries if they want to. So the flexibility that we have on our platform, people talk about super app. We are the earner super app. You can come onto Uber and you can earn any way that you want. And the peak periods, for example, of driving people are different from the peak periods of delivering food. And depending on your mood, I was actually talking to a driver and thanking him for helping us, and he was delivering food, so he could talk to me at the same time that he was delivering. So I think the great thing about our platform is drivers can choose, and there's no platform that's as flexible as our platform, and we think that's a structural advantage over all the monoline competitors.
DoorDash says they can now deliver things in 10 to 15 minutes. They're hiring couriers as full-time employees. What's Uber's response to that?
Our response is we want to partner as it relates to delivering incredible and delightful grocery experiences. So for example, we have GoPuff, which is a terrific partner on Uber Eats. I used them the other night, unfortunately for ice cream, but it got to me inside of 20 minutes, and it was a great experience. And my being able to have that experience on Uber Eats and are partnering with a player, GoPuff is obsessed with just building these stores, et cetera. I want to partner with the best of breed. But we'll be watching, this is very, very early as it relates to this environment, and we'll be watching and testing, but partnership is our first priority here.
The GoPuff co-CEO, Raphael, was on the show just yesterday. Will we see you get into this business, though, independently in a meaningful way?
I don't see us doing it in a meaningful way. I think we're getting into the business in a meaningful way through partnership.
Yep.
And, Raphael is obsessing 100% of his time on building stores, et cetera. I'm obsessing 100% of my time on building networks and pricing and matching and the platform benefits that come from Uber Eats and rides and launching Uber One. It's a different focus, and I think we can work together to make an absolutely delightful experience for eaters, which is, in the end, what I'm solving for.
So what about grocery? You've mentioned it a couple of times. How are we going to see that scale? Is it going to be big buys? Is it going to be organic growth? Are we going to see you build it from scratch?
All of the above. So we have brought Cornershop. We made an investment in Cornershop, and we own 100% of Cornershop. Cornershop is the Instacart of Latin America. Outside of Latin America, we are building organically. Our grocery business is now at a $3+ billion annual run rate. We expect to see that double plus, but the growth going forward is really going to be organic, and it's about bringing the Cornershop experience and all of the detail obsession that team has on customer service and blowing it out globally as it relates to the Uber Eats and the Uber Mobility audience.
You're in the firing line of EU and UK regulators. What are your contingency plans there? And could this derail profitability?
Well, I think our plans now are very similar to what you saw us with Prop 22, which is the vast majority of our earners want flexibility. That's why they come into the platform. They can get jobs anywhere. You see the labor situation. They can opt in for full-time jobs, but they come to our platform to earn in a flexible way, most of them in a part-time manner. And we think the worker designation, for example, in the UK that now has been verified, we think that is the way forward, which is flexibility and benefits. And we think that it makes delivering on Uber or driving on Uber more attractive to earners. And we're leading into that vision. So we hope that we'll continue to have dialogue with regulators to move in that direction.
But what if more regulators in other countries go that route?
Well, I think if more regulators go that route, that's good news. We love IC Plus as a company, and more importantly, our earners love IC Plus. Now, there may be some countries that flip to an employment model. And for example, Spain and mobility has flipped to an employment model as it relates to mobility, where we work with fleet partners who employ drivers. Our bookings in Spain are up 40% on a year-on-year basis. Our margins in Spain are close to our long-term targets of 8 to 9% of bookings. So for us, we can adjust as a company to any model. The question is, what's good for earners? And a model that retains flexibility for earners and then also provides them with benefits, that is the best end state for earners, and that's why we're sponsoring and leaning into it.
So on that note, everyone is still noticing the sticker shock, and maybe at some point it will wear off, that prices are still elevated, like 30 or 40%, according to the data that we're seeing. Would Uber ever subsidize prices, or is this just the new Uber? Prices are higher, and maybe they should be.
So I think that we see inflation everywhere, right? The price of used cars, new cars, fuel, there is an element of underlying inflation that's affecting all of us, grocery prices, et cetera. But at the same time, the supply and demand imbalance that we've seen in the past causes surge that increases prices more than, let's say, core inflationary levels. Surge is now coming down. as we improve supply-demand balances, the percentage of sessions that are surge are coming down. Our ETAs nationally are now below the magic 5-minute mark. In New York, they're less than 3 minutes now. So the service levels are coming down. I do think that the price of Uber is going to be higher than it was, similar to the price of everything right now, frankly. But we are working, as we improve supply and demand balances, prices will naturally come down, which we think is a good thing for consumers, and it's a good thing for us as a business too.
Uber CEO Dara Khosrowshahi, and there is much, much more. You can watch the full interview at Bloomberg.com. Now to another story we're watching. 6 Tesla workers have filed lawsuits alleging sexual harassment at the EV maker's Fremont, California factory. The female employees say they were subjected to lewd comments and catcalling, physically intimate touching, and discrimination. The women have filed 6 separate lawsuits claiming their workplace experience led to depression and anxiety, ultimately preventing them from advancing in their careers. This is a story we're going to continue to explore and follow. Coming up, Super Saturday is on deck. We're going to be joined by Rent the Runway CEO Jennifer Hyman to talk about holiday shopping and subscription trends and their first earnings report as a public company. This is Bloomberg. Since going public back in October, Rent the Runway's shares have remained below their IPO price. The company's first earnings report last week revealed a third quarter net loss that widened. However, revenue for the quarter was up 66% year on year. So what's the outlook for 2022? Let's bring in Rent the Runway CEO and co-founder now, Jen Hyman. Jen, good to have you back with us. So look, investors seem to be worried about that loss. What do you have to say to them, and how do you plan to turn that around for the next quarter?
Yeah, so I'm super proud of our performance this quarter. We beat our guidance on subscriber growth. We beat our guidance on revenue. We beat on margin growth. And we've continued to demonstrate our pathway to profitability by things like our capital light acquisition of our inventory and our operating leverage. So we're growing the business significantly year over year within the context of this larger COVID environment. And I think it really proves the resiliency of this business model. You know, this was a business in 2020 that was hit hard. We brought it back strong. Revenue's up, subscriber count is up, and we haven't even experienced what will be, we think, a massive opportunity as the macro environment normalizes.
So let's talk about the macro environment. Some people may never go back to the office, let alone back to the runway as often as they might have in the past. How do you see that all impacting your path to profitability?
Yeah. So there's 2 things that are really interesting. The first is a deliberate strategy that Rent the Runway has taken on to diversify how our subscribers use Rent the Runway. And today she uses us 50% of the time for casual use cases. So just lounging around at home, hanging out in her neighborhood, going out to dinner, you know, doing things that are not in the context of work or evening events. So we have been successful in getting her to widen how she thinks about Rent the Runway and becoming a wider utility in her life. Now, second, what we're finding is that how she is dressing for work and for special events and for casual occasions this year is more fashionable than it even was in 2019. So even in a world where people are working over Zoom, and we're finding that a very small percentage of our customers are back in the office, she's actually dressing up more for her Zoom life than she did in the pre-pandemic environment. And I think that it points out a larger trend around fashion as self-care and fashion as self-expression. We certainly have all experienced the pajama fatigue of 2020, and we've realized that, like, the reason why we love fashion is it makes us feel good about ourselves. So whether we're working in an office or we're working in our, home office, we are dressing up and we're feeling great about how we do it.
So holiday parties are coming back, at least some of them. Are you expecting a boost from that? And what are you expecting to see on Super Saturday, the last Saturday before Christmas?
So we are finding, as it relates to Q4, that The smaller events are certainly back. You know, people are having smaller holiday parties, smaller gatherings, but the big mega events of pre-pandemic life are not yet back. And we do anticipate that some of those kind of social events, the big weddings, the galas, are being pushed into 2022 and 2023, which we think is great because we've been very pleased with our growth this year. Our subs are up 113% in the first 3 quarters of the year. So any acceleration beyond that with, you know, environment getting better, I think just creates even more opportunity for our business.
Quick 30 seconds left. I know you've traditionally said you're not impacted by sort of the normal supply chain issues, but if the supply chain issues continue, could that delay your new inventory and could that hurt a little?
The supply chain issues that the rest of the industry is facing is a massive competitive advantage for Rent the Runway. Our selection has never been higher. We monetize inventory over multiple years, so we already have a selection from prior years on our site that is of the top luxury designers in the world. So we think that both inflation and supply chain issues make more and more women come to Rent the Runway, and it could lead to market share gains for us.
All right. Well, interesting to hear how you foresee women dressing in this new hybrid world. Rent the Runway's Jennifer Hyman. Always good to have you on the show. Thanks so much.
Thank you so much, Emily. Happy holidays.
You too. All right. Coming up, as Omicron continues to spread, mask and vax mandates amp up. We're going to bring you a virus update coming up next. This is Bloomberg. Now to a virus update. Health officials say the Omicron variant now makes up 3% of all sequenced COVID cases. The CDC says the highly mutated variant has now been detected in 33 states across the country. The Delta variant still remains the dominant strain in the U.S., accounting for 96% of sequenced cases. But New York Governor Kathy Hochul still not taking any chances. The rising infection rate prompting her to institute a statewide indoor mask mandate for businesses without vaccine requirements. COVID-19 hospitalizations across New York have surged by 70% since Thanksgiving. And with that, Apple reinstating its mask mandate at U.S. retail locations and say they'll proactively limit store occupancy. The tech giant says it's requiring masks for shoppers, a rule that had been dropped at about half of its U.S. stores. More of Bloomberg Technology coming up next. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Let's get back to the markets where Bitcoin staged a comeback Tuesday, rallying above $48,000. Our Ed Ludlow here with the latest. Ed, what'd we see?
Yeah, it's interesting because it's been a pretty choppy 24 hours. Just first, an operational update. If you go on Coinbase or coinmarketcap.com on Tuesday afternoon, you may have seen some crazy prices displayed or gains in prices displayed. And what Coinbase is saying is that these were non-tradable crypto assets and it's just a display issue. These aren't actually impacting trading, but in some cases prices were displaying as being up 1,000% in a single day. So some kind of error going on there, but it was interesting to see Bitcoin make that comeback Tuesday afternoon above $48,000. But we like to look at the bigger picture, right? We're down 30% on Bitcoin over the last 30 days or so, after the last month or so. And the question is, where do we go from here? Well, luckily, we spoke to Mike Novogratz, Galaxy Digital founder, of course, the billionaire cryptocurrency trader, and he's basically saying things could get worse before they get better. Have a listen.
Bitcoin, 42,000 is at a pretty important level that should, like low 40s should hold. We started the year at 30, and so there's been so much of a change in mindset in this space.
A change in mindset. How much has that got to do with central banks? Of course, we have the Fed on Wednesday, and there's been this idea in the market that central bank stimulus has helped prop up all asset prices. But as the narrative around unwinding stimulus has kind of picked up traction, well, we've seen a decline in cryptocurrencies. And don't say I never give you anything, Emily, because today I've got a brand new crypto index for you. The NVIS Crypto Compare Digital Assets 100. You know, we often look at Bitcoin and Ethereum, right? Because they are the biggest tokens by overall market cap. But this tracks the 100 largest cryptocurrencies. And you can see we've actually lost a quarter of our value since mid-November, around the same time that this central bank's discussion came up. So it's going to be an interesting one to track. As the Fed unwinds stimulus, as rates rise, where do cryptocurrencies go? And in particular, Bitcoin.
Ed, you just wrapped it all up with a bow. Thank you very much. Well, if anything's for certain about crypto, it is that volatility one way or another will continue. For more on what we can expect, I want to bring in Kraken CEO Jesse Powell for his outlook on 2022. So, Jesse, do you agree with Novogratz? Could it go down to 42 or will it?
Certainly could. Hard to predict where the price is going. You know, I'm actually paying more attention to the US dollar these days, wondering where the bottom is on that. It seems like inflation is out of control and there's no end in sight.
Okay, but there's all this talk about a crypto winter that maybe we're already settling into it, or either way, it's going to come early next year. What do you think?
It's possible. Historically, Bitcoin in the crypto ecosystem has revolved around these cycles, sort of around the Bitcoin halving. But, you know, I think a lot of people see anything under $40,000 as a buying opportunity. I was personally buying when we dipped back close to 30,000 a few months ago. And, you know, I think a lot of people have some dry powder on the sidelines just waiting to come back in at rock bottom prices.
Now, you might have been expecting this, but back in August, you were very bullish. Take a quick listen to what you had to say then.
The moon is the bear case for crypto. You know, we're going to other dimensions with Bitcoin. So I think people just need to hold on. You know, we're still early days. We're still early in the cycle. I think we could see $100,000 plus a coin late this year, early next year.
Okay, so we're not even close to 100,000, and now we're at the end of the year, let alone the moon.
We got a few days left. We'll see.
Okay, but were you wrong there? Or you still think that's going to happen?
You know, it's hard to know. You know, like my price predictions for Bitcoin, you know, going back to 2011, you know, I thought we would all be in flying saucers and, you know, paying for our coffees in Bitcoin. So, you know, it's hard to know where it goes, but you look at the long-term trend line of Bitcoin and it's just up and to the right consistently. You know, I always tell people if they're thinking about buying Bitcoin, think about it as a 5-year plus investment. You know, it's up and down day to day, week to week. You don't want to be trading this on short time frames. It's more of a buy and hold investment.
Okay, so maybe no flying saucers yet, but there's obviously a lot of interest and activity, a lot of work to better understand the asset by less experienced investors. What is Kraken doing to capitalize on all of this activity?
Sure. So, I mean, we support over 90 cryptocurrencies and over seven fiat assets. We're working on an NFT platform right now to give investors exposure to the burgeoning NFT market. You know, we also offer futures contracts in countries outside of the United States. We offer margin trading outside of the United States. So we've got a bunch of features, super easy onboarding in the United States, ACH rails. It's just a few clicks to get started with as little as $10. So we're doing a lot to really try to bridge the educational gap for new users and get people more comfortable with cryptocurrency, since there's so much FUD out there. You know, there's a lot of negative news. I think there are a lot of unfair attacks on Bitcoin and cryptocurrency in general. And a big part of our job is just to educate people about the real merits of cryptocurrency, especially those who've been left out by the legacy financial system, you know, and don't have another option.
And what about the merits of NFTs? Again, something a lot of people still don't understand. What kind of activity are you expecting to see in NFTs in particular next year?
We've seen a tremendous amount of activity recently around the NFTs that are related to various metaverses, basically virtual worlds. So anything regarding like land in a virtual world or items that exist in a virtual world, digital clothing that you can take across different virtual worlds, or you know, they often represent proof of membership of a virtual club. We think this is just going to get to be a bigger and bigger thing. And, you know, we want to be in front of that for people.
What were your big takeaways from the crypto hearing on the Hill? I mean, it certainly is catching the eye of legislators, but there doesn't seem to be broad agreement about how it should be regulated.
You know, this is a problem 10 years going in the United States. You know, we're one of the last countries to really get it together here. There's so much uncertainty. If you talk to the regulator, there are some things that there isn't a regulatory regime available, to do it. There isn't a license, to do what we want to do. So I think a lot of people are actually going offshore to be able to do what they want to do, and that obviously, flies in the face of the objective, the public policy goals of these regulators, which is largely consumer protection. And there's a two-tiered system here in the United States when it comes to the SEC. If you're wealthy, you get to do whatever you want, and if you're poor, you're very limited in the trading and investment decisions that you can make, regardless of your education. And so that's something we're really trying to change here. We're not against regulation at all. We're licensed all over the world. Very happy to work with regulators. It's about clarity, though, for us. There's a lot of people sitting on the sidelines just because they're not sure about it, and the uncertainty has a chilling effect on banking and across the board.
So I hope you'll humor us with a few more predictions, given that you're always so colorful. What are your top 3 predictions for the crypto market in 2022? Do we get to one Lambo then?
Maybe I should stop making predictions. I'm going to say the dollar's going to 0. I'm going to say you should start stocking up on gasoline and milk right now, probably. If you can prepay your healthcare bills and your tuition, you should probably do that now. Take on as much US dollar debt as you can, because there'll probably be a jubilee at some point. Interest rates are going negative, so don't hold your currency in dollars. Those are my predictions.
Jesse Powell, we'll have to catch up with you next year to see how those ring true. Thank you, as always, for joining us. Coming up, my next guest says there's infinite problems to solve, and he's ready to help fund it all. Initialized Capital's Gary Tan joins us next to talk about how he plans to put hundreds of millions of dollars just raised to work. This is Bloomberg. My next guest has been behind some of the biggest, most recent success stories of Silicon Valley, including Instacart, Cruise, and Coinbase. Now, Gary Tan and his Initialized Capital venture capital firm are looking for their next big bet, launching 2 new funds with $700 million raised. He joins us now for more. So, $530 million for new investments. Gary, where are you most excited to put that money to work?
Well, I think one of the things that I think Jesse was just talking about on the show was what's happening with all of this monetary expansion. And I think what's really exciting to me is that infinite money can and will now go to every type of technology. And so it's never been more exciting to be someone who could build new software or new technology that could actually solve real problems. And the thing that I'm sort of most excited about personally right now is this new idea I call outcomes as a service. I think that we've talked about SaaS, and SaaS has been sort of the cornerstone of tech for so long. But I think we're coming into a new age where we're realizing that a lot of the businesses out there don't want to buy software. They don't want to pay $10,000 a seat and take the risk. They want an outcome. And so what you're seeing is this melding of fintech into software. And great examples of this include Shelf Engine, which actually reduces food waste just using software for better ordering. And there are thousands of grocery stores now. 30% of food out there goes in the garbage. And now with Shelf Engine, they're bringing that down by double-digit percentages. That has a real climate impact. Or Formic, which is actually financing robots for American manufacturers, which is this crazy $450 billion labor shortfall by 2028. And that's actually fundamental to our American competitiveness. And so for me, I think these have real impacts on humanity, and it is still fundamentally backed by great software, great people. But if you add a lending component, you can actually give people the outcomes they want instead of forcing them to buy software to then go get those outcomes.
Interesting. We're looking at some Instacart video here. Obviously, you were one of the earliest investors, and I was just speaking with Uber CEO Dara Khosrowshahi about growth potential in delivery. I'm curious how much more potential you see there. For example, you've got an additional fund to do follow-on investments in some of the companies you've already backed. Would Instacart be one of them?
Well, we're very bullish on what's happening with Instacart ongoing. But what, we are so early, we get involved in companies when they're literally one or two people, just an idea sometimes. And the story for Instacart was the founder of Porva Meta actually sent me a 6-pack of beer back when it was just him and 2 people he had hired off of Craigslist. So we want to continue to back people at that earliest possible stage, really before any of these things are even categories yet. And that's sort of why we were able to see, Coinbase way back in 2012, before Bitcoin was even on the tip of any other investor's sort of tongue. And that's really what we think is where our sweet spot is. And seed, Series A, and then following on into the B's and C's. That's allows us to work with people over the course of many years, and they get to know us, and we get to know them. And so I think that's really my favorite way to do investing. We're investing with people over the long haul.
So you heard my interview with Jesse Powell earlier, and I'm curious, do you think we're heading into a crypto winter, and what does that mean? We've seen something like almost 24, 70 to 90% drawdowns over the course of many different cycles. And so I really like what Jesse said, which is think of it as like at least a 5-year, maybe a 10 to 20-year buy and hold. These cycles tend to end within a couple of years, and it's really a function of the interest rate environment. So I don't have a crystal ball. I'm still really, really impressed by what's coming with sort of Ethereum as ultrasound money. They're going into their 2.0 phase with proof of stake. I'm also really impressed by new chains like Avalanche and Solana. They're showing really quite a lot of promise among developer communities. And that's always been our focus. If software engineers, if designers, if product people are investing into ecosystems and making the choices around these new APIs and these new blockchains, then those are the things that we think everyone should be paying attention to. Now, how are you evaluating potential investments at a time when some startups that aren't making any money are commanding billion-dollar valuations?
Yeah, the hard part is, as my mentor, Paul Graham at Y Combinator said, startups equal growth. And so, on the flip side, though, obviously, over time, we need to show real free cash flow. And, these things are sort of popularity contests in the short term and, really weighing machines in the long term. And so one of the things we really focus on when we work with companies is actually how do we make sure that we're not just selling $20 bills for 19 bucks or even $1. And I think that that's actually really the role of the early stage investor, to help someone think through the stuff early. It's quite dangerous, and does happen actually in sort of mid to late stage startups, that these things become money raising exercises. And that to me is really about not getting the fundamentals right when it's 1 or 2 people, just an idea starting out. And that's really our job, to help steward these startups that early.
Last quick question. You told our Bloomberg Tech Conference earlier today that startups should get those term sheets signed pronto if they have them. Why is that? What are you worried about is coming?
Well, I think at the end of the day, tomorrow is uncertain. And, for us, I know that Initialized is going to continue to invest in very early teams in unproven spaces, but you have to keep your company alive and properly capitalized. And the big benefit of doing that is if you could have a large war chest going into a recession, suddenly, the number one problem that everyone's facing right now is hiring. Hiring every role, every position, executive all the way to IC, is so incredibly hard. In a recession, everything flips. And then that allows you to build your product, your startup, your go-to-market 1,000 times better. And so in those hard times are actually the moments when the next Airbnb is born.
All right. Initialized founder, Gary Tan. Always good to have you with us, Gary. Thanks so much for stopping by.
Thanks for having me.
Meantime, the U.S. Department of Homeland Security Secretary Alejandro Mayorkas announced a new program where the agency will pay outside hackers to find vulnerabilities in its computer systems. He spoke earlier at the Bloomberg Tech Summit as well.
We're going to be paying between $500 and $5,000, depending on the gravity of the vulnerability, the impact that remediation will have, And so it's a scalable amount of money, but we consider that quite significant.
This type of incentive program is popular in the cybersecurity industry, known as a bug bounty. Coming up, more from the Tech Summit. We're going to explore the long and winding road to fully autonomous cars in cities all over the globe. Will 2022 be the tipping point for the robo-taxi? That is next. This is Bloomberg. For a long time, autonomous technology has promised benefits, but progress has been slow and, of course, hurt by the pandemic. Our Ed Ludlow hosted 3 of the industry's top execs at the Bloomberg Technology Summit to talk about if we're finally at a tipping point for self-driving cars.
One of the issues is that when people are talking about cities, we have been testing in 13 cities globally, historically. But we also realize the same issue, is that it's nice to have different variety of data. That's definitely helpful, but we need to make it real. And for people to really use it in their daily lives, the cars have to be first driverless. It have to be driverless. It's not the same if you have a safety driver there and call it commercialization. 2 is you have to have a very large ODD. People need to be able to go anywhere they want. And I can go anywhere I want, to school, to home, to country. And 3rd, to cover that large amount of ODD, you need lots of cars. So several hundreds of cars is not going to do it for a real service, for a city, for a metropolitan city like Shenzhen, Beijing, or Shanghai in China. So I think that's the 3 key factors that we need to cover when we talk about real.
Jesse, I think it's fair to say that Zoox has been a little more pragmatic than some of its peers in the Bay Area. You've been, I guess, more conservative in what your goals are in terms of timelines. But what is it going to take for you to commercialize the technology? Is it in your control, or are you at the will of regulators on that front?
So, in the United States, there aren't too many regulatory roadblocks to getting this technology out there. The United States has actually been pretty progressive. NHTSA came out in 2016 with the world's first guidelines for fully autonomous vehicles. And, in a pretty landmark decision, they said you can consider the AI to be a driver. And that was, 5-6 years ago now. Many states, the United States, have also come along with their regulations, and they've tried to pave the way. And so, frankly, what's really preventing the wide-scale deployment is, all of us here, we have a very high safety bar for this technology. We want to make sure that before we deploy these vehicles at scale on public roads, that they are meaningfully safer than human drivers. And so the difference between saying, okay, in these situations it's really safe, but we still have these corner cases, versus we handle everything so well that we can deploy them at scale, that's really what we're working on right now. So, we showed our vehicle driving autonomously in downtown San Francisco. It has the functionality to do that. And in many ways, it's already safer than people. But we want to make sure that we have a comprehensive safety case as we deploy it at some scale. And that's exactly what we're working on right now.
James Peng, we've talked a lot about robo-taxis, essentially, vehicles that a passenger who needs a ride gets into and goes from point A to point B autonomously. But there are other use cases, delivery, trucking. Which use case, to your mind, is commercialized first? Which use case will we see most widespread?
We actually don't look in a way to see which one will be commercialized first, but we rather looking at which application going to have the most impact to our daily lives. And we certainly see the biggest, and when you're looking at the transportation or mobility as a pie, the 2 biggest slices are the transportation or the mobility for passengers and for goods. So that's what Pony is focused on. We are focusing on robotaxi and robotruck, because we think those 2 applications will have the biggest impact to us. And that's another way to why we try to make our virtual driver to be so general and so expert, so that we should be able to drive all different types of vehicles.
Now, since that interview, the California DMV suspended Pony's driverless testing permit after an accident involving a test car. Pony saying no other cars involved, no one was hurt. This is Bloomberg.